You all see me? Can you hear me? Hello? Huh. I'm still seeing chat. Okay, can you guys see me? Thank goodness gracious. There was something real complicated that got really hairy and tangled in the back end. So thank you guys so much for your patience. I'm super excited. We are back. I think we fixed the situation. We're going to have Alexis. Let me tweet. Thank goodness. Yeah, it was something that was not super intuitive. So shout out to our mod team. And let's see, I'm tweeting out the link for you guys. Super excited. Thank goodness. How crazy. Anyways, so really excited. We're back. Let's get back into it. So appreciate it. Thank you guys. My, inner, I say this with a lot of love and respect, but my inner old person came out, and I'm very thankful that that you all were there doing tech support for me. Okay, let's go. Let's kick it to Alexis. I don't want us to delay anymore. So let me hop on here. Let's see. Alexis, are you there?
Coming. Can you hear me?
All right, I can hear you. Can our folks at home?
You.
Can our folks at home hear Alexis?
Oh, can folks hear me?
Woo! Okay, we got a yes. All right.
Oh, hooray.
Oh, goodness gracious. Thank you so much for joining us today, Alexis, especially on such short notice with these crazy events going on. So thank you. And, in our last stream, I ended the last stream, but for folks who are just joining on, Alexis is a former Wall Street professional who then took her expertise and her experience and insight, turned to Occupy Wall Street, and now she works on financial reform. So, Alexis, do you want to tell us a little bit about your story before we get into it?
Thank you again, Congresswoman, so much for having me tonight. It's really a pleasure to be here with you. So I worked on Wall Street for the beginning of my career. I interned there. I worked there right out of college. I went to school in New York. I went to Columbia. I studied computer science, and that's just, who recruited at Columbia for the computer science majors was the banks. And I worked there for about 7 years. At first I was a programmer, and then I moved into kind of more software design. And, it's a pretty crushing place to work. It's, and every birthday I would sort of look back and say to myself, what am I doing with my life, right? I'm making more wealthy people even more wealthy, and that is what I'm spending my time doing. And so in 2010, I quit. I did a little bit of tech consulting, and then in 2011, Occupy Wall Street happened, and I started going down to the park after some young women were pepper sprayed in a kettle by the NYPD. And at first I was a little bit skeptical, but I was really moved by the process, which was so different than the very hierarchical framework that I was used to on Wall Street, right? It was consensus driven. We were all listening to each other. Everybody's voice was really tried to be heard. There was this concept of progressive stack, where they would write down everyone that wanted to ask a question and then try to have people ask questions in sort of reverse order of, your power in society, basically. So it was really a learning experience for me. And then I co-founded what I call the world's nerdiest book club, which was this group called Occupy the SEC. And we studied this comment letter. We wrote a comment letter about a regulation called the Volcker Rule, which was meant to lower risk that Wall Street firms were creating by trading for their own accounts. And we wrote this very, very long comment letter, and it got a lot of media attention because it didn't fit the narrative of what people thought when they thought about Occupy. They were like, Occupy Wall Street, not only can they not read, they definitely can't write. And here we were writing this very, very long comment letter. So after that, I moved into nonprofit advocacy, and now I work at a group called Americans for Financial Reform, and we basically fight for a safer and fair economy overall. And so that's my story.
Mm-hmm. It's incredible. And so it's crazy too that how the world works in that, I was telling folks earlier that around that time I was working for a community organization that happened to be in the Wall Street area. There's just like donated space in the area for a few months. And so it's so weird how we were probably within a block of each other back then, and now it only took 10 years, right?
Right.
So
a decade later.
Yeah, exactly. A decade later, we're on a Twitch stream together. So I'm really excited. You wrote this super insightful article, this week about everything that was going on with Wall Street, GameStop, all of the stuff that's going on. So, if you could give for anyone on this stream that isn't fully caught up on the situation, if you could give a 1-minute overview on where we're at right now, kind of like you did in your article, and then let's dive into some of these deeper questions and where are we today, and where are we in terms of the positioning of hedge funds and everyday people in this entire situation.
Sure. So if people want to read the article you just mentioned, Congresswoman, the easiest way to find that is on my Twitter. It's just at Alexis Goldstein, and it's my pinned tweet. But I'll do my best to do it in a minute. Sure. But before I get into that, I just want to sort of take a step back and say that I think the events of this last week lead us to some pretty deep questions about how do we want to marshal the resources of society and what do we want to pay attention to, right? Do we want physicists designing trading algorithms, or do we want them focusing on climate change? Mm-hmm. So that's sort of my big picture question for everybody. So you just want sort of a walkthrough of what happened and who was involved?
Yeah,
is that right?
So let's talk about broad strokes for folks watching that have, haven't quite wrapped their mind around it. How did we get to a bunch of Redditors squeezing hedge funds to the point where there's this idea that, hedge funds might have to get bailed out? Or people floating this idea?
Sure. So I think it's a combination of things. I would say we have a K-shaped recovery right now, right? We have some people that are doing terribly, that are still unemployed. We have some people who are fortunate enough to work from home, who have some disposable income and extra time on their hands. Some of the people in the latter category have begun trading stocks in their spare time at home and, working remotely with nothing else to do. And so this Reddit forum that's been around for a very long time called Wall Street Bets, I think grew and grew and grew. Just as a lot of people, again, and I want to say this isn't everybody. I know a lot of people don't have disposable income to trade stocks and to trade options. But some people got really interested in this forum. It grew. And one technique that I would say Wall Street certainly has used against each other historically is trying to squeeze what are called shorts. So a short, so you can buy stocks, right? That lets you own a tiny piece of a company. You can also bet against a stock, and that's called shorting a stock. And the way that works operationally is you borrow that stock from somebody else, you immediately sell it, and then you hope that it goes down. And if it goes down a lot, you can buy it for really cheap, you return it back to the person you borrowed it from, and you get to keep the profit. So that works fine and good if the stock goes down. But if the stock gets to go up and up and up, now you're losing a lot of money. Now you're starting to sweat. Now you're starting to get nervous. And you either have to hold it out and hope that it turns around, or you have to buy it back for much more money. And so the sort of scheme, I guess, or the idea on Wall Street Bets was to find stocks that they liked and thought were good, that were very heavily shorted, buy them, tell everybody and all their friends to buy them, and that would force the shorts to eventually give up and have to buy the stock back themselves, which would only then raise the price even more. I will say that the other thing that made GameStop and all these other stocks go up even higher than that is people were also buying what are called options. And options are a derivative. This starts to get into an alphabet soup, so feel free to break in at any time.
Of course.
An option gives you the right, but not the obligation to buy a stock in the future for a set price. So an option on GameStop that expires in a week might have what's called a strike price, and the strike price is the price you get to buy it at in the future. And why am I saying all of this? When you buy an option, you buy it from somebody on Wall Street, typically a market maker, who usually owns that stock. And they are saying, I have 100 shares of stock and I am agreeing to sell it to you in the future at a set price. But if they don't own the stock, they have to buy the stock to hedge the position. So you had short sellers who were potentially going to have to buy GameStop. You had people on Wall Street bets buying a lot of GameStop. You had people on Wall Street bets buying options on GameStop. And then you had the people selling the Wall Street bettors options also having to buy GameStop stock in order to hedge their option position. So that sort of created this upward momentum in the stock. I do want to say that I don't think it's that simple. Mm-hmm. I think the important thing to remember about Wall Street is they don't want to know, they don't want other people to know what they're trading. They want to know what their competitors are trading, and their competitors want to hide it from them. They pay a lot of money to try to figure out what their competitors are trading. And all of a sudden, you had a Reddit forum that was telling everyone on Wall Street not only what their position was, what their plans for the position was, and what they were trying to get their friends to do with the position, which, you know, is actually Wall Street's dream, is to know what other people are going to do with a stock in the future. So what I suspect happened is, in addition to all these people on Reddit buying, in addition to the people who were hedging their option sales buying, you had a lot of people on Wall Street saying, oh, this is going to go up and I'm going to get ahead of it. And I'm going to ride it all the way to the top. And when it starts to crash, I'm going to ride it all the way back to the bottom. So that's sort of the shortest possible version I can give about what started this.
So in a way, with all of the potential activity, and please correct me if I'm wrong, but in a way, are you saying that you have all of these Wall Street actors that are seeing what's going on potentially with this online activity and saying, well, we know that there's going to be a high volume of buys ahead of time, so I'm also going to buy under kind of the guise of all of this online activity going on, and then potentially make out on top of it as well.
Yes.
That's what you're saying too? So
yes, that is my suspicion, yes.
So yeah, so you suspect that this is not just Redditors buying this stock, but that it's also potentially larger actors on the market, and that's something to explore, that this is potentially larger actors on the market looking at activity happening ahead of time and then getting ahead of it getting ahead of that as well, and almost using that as a veneer for riding this stock.
Yeah. And there's one other wrinkle to all of this that I think is important for folks to know, which is a lot of folks have used the app Robinhood, which I like to think of as the Facebook of stock trading. And I say that because Facebook is sort of designed to keep you on Facebook, right? It's designed to grab your attention and keep your attention. And Robinhood is very similar. I would describe it as gamified. I know a lot of Robinhood folks would disagree with that assessment. That's just my personal assessment. But Robinhood is free. It doesn't charge commission. And the way that their business model works is they sell their order flow to market makers, which are these sophisticated Wall Street participants who execute the orders for them. The market maker they sell the most of their flow to is a hedge fund named Citadel. And Citadel is not just a hedge fund. They are also a market maker. They are also a technology company. They are owned by a billionaire named Ken Griffin, who is out of Chicago, who has funded some very questionable things in his political giving. But Citadel pays for Robinhood's order flow. And strangely enough, or maybe not so strangely, one of the hedge funds that Wall Street Bets was very excited about blowing up, Melvin Capital, was rescued by Citadel after it blew up. So Citadel is paying for the order flow on Robinhood, which is driving up the price of the stock, which crashed one hedge fund. And then Citadel sort of bought that hedge fund on the cheap after it crashed.
And so, for folks at home, so that we can put these dots together, because I think this is an important relationship for us to communicate and map out with you. So basically, also what you're saying now is that you've got Melvin Capital, right? Melvin Capital is the hedge fund that was shorting GameStop. They were the folks that were saying, we're going to make a ton of money. We're going to make a ton of money off of GameStop's stock going down. Wall Street Bets comes in, potentially with folks on Wall Street looking at what Wall Street Bets is doing to kind of supercharge this activity and say, you know what, we're going to make the stock go up, which would, of course, put Melvin Capital into an extraordinarily compromised position, which would essentially prompt them to get bailed out by one of the groups known as Citadel. Now, okay, so Citadel then swoops in as one of the actors to bail out Melvin Capital, but Citadel's owner also co-founded a different Citadel. They're both connected, hence the same name by the same owner. They are two technically different entities, though, but they are the same founder.
Right. So Citadel LLC is the parent company. Citadel Securities is the market maker that buys the Robinhood order flow. But the parent entity, Citadel LLC, is the one that swooped up Melvin Capital. And Congresswoman, I should just add there were actually two Wall Street firms that bought Melvin Capital, or rescued it, I should say. Citadel and another one, now I'm blanking, of course, on the name, but it's the new fund of Steve Cohen, who you may know as the owner of the New York Mets. And Steve Cohen is famous for all the wrong reasons.
Is what the chat said.
Yes, thank you. Steve Cohen is famous, or infamous, I should say, because he used to have a hedge fund called SAC that pled guilty to insider trading in 2013 and had to shut itself down. And so this is the next iteration of Steve Cohen.
Right. So we've got Citadel and then Point 72, who bail out Melvin Capital, who are relying on GameStop stock to tank. So Citadel swoops in to bail out Melvin Capital. But then meanwhile, this connected Citadel under the same founder, it also receives the advanced information from Robinhood. That's what you're saying?
Yes, and I should clarify that's not unusual. That is allowed. It is something called payment for order flow. During the Obama administration, they raised the question about whether or not that was a good idea. They asked one of their SEC, which is a market regulator, they asked the SEC's advisory committee if payment for order flow was just kind of disguising how you were really paying for stock trading. So the idea is Robinhood is free, you don't pay commission, but the broker is supposed to make sure that they give you what's called best execution. So they execute your trade and either get you the best price or they execute it really, really fast. Citadel is paying Robinhood for that order flow, and they pay them via these things called rebates. And Citadel might pay, whatever they pay. A different market maker may pay a little bit higher rate. And what is not supposed to happen is the broker is not supposed to give the order flow to the highest bidder, because that would prevent them from giving their customers best execution. People should know that Robinhood was accused by the SEC in December of 2020 of not giving their customers best execution and actually costing them $34 million, even when you accounted for the free commissions, because of their failures to provide them with best execution.
So you're saying just a month ago, Robinhood was in trouble for not optimizing their customers' trades?
Yes, it was covering a period of time farther back in time, right? It was, I think, in the 2018 range, but the action came down. Robinhood did not admit nor deny guilt in the action, but they did have to pay a civil penalty to the SEC to settle the charges.
And they did pay that penalty to the SEC. Yes. So these were charges that came up from the SEC just 1 month ago, but these were they were regarding actions that happened in 2018, but that this is documented past behavior from Robinhood.
Correct. And the other thing is Robinhood wasn't disclosing, another part of that action was Robinhood wasn't disclosing that they were paying our market maker for the order flow. So why do I bring all this up? I bring this all up to say, is Robinhood doing the best by their customers? Are these fintech companies that are so easy to use that lots of people are using to trade stocks, are they doing right by their customers? I think that's an important question that regulators should be asking right now.
So let's talk a little bit about what happened today with the freeze that you saw, not just on Robinhood, but on, I believe, E-Trade, Wellbull, etc., where you have a lot of these retail these retail platforms, all of a sudden putting a halt to some trades on not just GameStop, but there was also some activity, I believe, around AMC and other stocks that have been particularly identified by the subreddit Wall Street Bets. Tell me a little bit about what is going through your head when you see activity like that. And, for folks at home, there are multiple possibilities here. I think a lot of people sometimes want to jump to certain conclusions, but in order for us to really responsibly look at the situation, it does seem like there's more than one potential explanation. But I'm interested in hearing what's going through your head when you see that, and what are some of the possibilities that could arise?
So I just don't know why Robinhood made the decisions they did to stop trading, allowing purchases of certain single name stocks today. Their decision was a little different than some of the other brokerages. So for example, so think of it from the point of view of the brokerage, right? Especially if people are selling stocks short, which has the potential for unlimited losses. If your client goes bust and enough of your clients goes bust, then the brokerage goes bust. Mm-hmm. So what a different brokerage did, not Robinhood, but one called Interactive Brokers and some other brokers on the that regular people use, is they just changed what's called their margin requirements. So if you wanted to buy a stock in some of these really active, volatile names today, you had to supply 100% cash margin. And what does that mean? You basically just had to front all of the money yourself, which might sound funny to people who don't trade stocks, but believe it or not, you can sometimes trade stocks with borrowed money. So they're basically saying you can't borrow any money. You got to trade cold hard cash if you want to buy these stocks. So that's what I sort of would have expected to see from everybody. Instead, what we saw is Robinhood just straight up saying you can't trade in any of these names. Now, I don't know that we know any more than that. Was there, direction coming in from regulators? Was this just a decision made by Robinhood? I don't think we know, but I was a little surprised at their action as it related to what other brokers did. And I should just say, if we can just rewind very slightly, because I forgot to mention this before, about the whole idea of payment for order flow. The reason that's important is because the firm that you give your order flow to knows what your executions are, and they can run in front of it and front run and trade ahead of it and make profits, which may be fine or may not be fine. But I just thought that that's important to mention.
So you're saying,
Citadel.
Sorry, you're just about to say, and Citadel's the one who receives that advanced
Correct.
Information from Robinhood. So
Correct.
all of these folks, but that advanced information only lasts for a few seconds, right?
Correct, but Citadel is known, and other entities that do this market making are known for their high frequency trading algorithms. That's their specialty. Mm-hmm. They're experts. They hire tons and tons of programmers, and so they're allowed to make profit ahead of that. Mm-hmm. But I think the question that a lot of people have, and we just don't have enough information to know, is were they doing more with that information than just executing the trades?
And so those are some of the questions that seem to be outstanding, right? Because if Citadel's receiving this advanced trade information from Robinhood, I go on my phone, except not me, because I don't believe members of Congress should own individual stocks, so I don't have any. But hypothetically, if I'm on Robinhood and I hit my order along with thousands of other people at that moment, Citadel is potentially able to get that information milliseconds in advance. And in those milliseconds, their trading algorithms could adjust, knowing that advanced execution information. Is that correct?
Yes. And I'll say that since a lot of the Robinhood trades are very low volumes, what they often do is batch them together. And so Citadel might be trading in much larger volumes and then matching the orders as they batch them together. Again, all in this sort of time of many microseconds. But that's what they specialize in doing, is this very, very high speed, high frequency trading, as it's called.
And so I think here, for folks that are watching at home, this is what raises a bunch of questions, not just from me, but also from, I think, this is why this is starting to attract the attention of regulators, members of Congress, et cetera, because there's a lot of policy questions that come up. Policy questions about shorting stock, policy questions about, as you said, some of this advanced information. You mentioned the Obama administration started to raise some questions about the potential for this. And I think this also is about power, right? because everyday retail investors don't get that. Even if you were able to, who knows, program something at home, you do not have that millisecond advance information. You just don't have the market power to have that, right?
Right. And I think that's the reason why, yes, lots of people are making money right now. Yes, one or two hedge funds are blowing up, but there's still always going to be a systemic disadvantage that retail has. And that Wall Street is always going to have the advantage. They have more data. As you said, Congresswoman, they're faster. They can execute things faster. And so they're always going to run circles around the little guy, even if it seems like they're losing.
Yeah. And so I think this is something that's important for us to kind of talk about too, because this is ultimately so much of what has made this story, I think, really exciting to people at home, is that at least for this 1 week, at least for these, 3-4 days, it finally felt for so many people at home that are seeing this happen, people were really feeling like everyday people were finally able to collectively organize and get back at the folks who have historically had all the marbles on Wall Street and force one hedge fund into an existential crisis. But that is what has happened in this short window of time, people really feeling this rush of organizing, etc. But it still raises, I think, this overall question of who are all of these rules, and who is the concentration of power and money still benefiting and still advantage towards. And some of those underlying rules haven't changed, right? It's still the wealthy and still the powerful.
Right. And I would say that, I'm always the skunk at the garden party here, but unfortunately, when volumes are high, and they've hit record highs this week, Wall Street prints money. They were incredibly profitable in the pandemic when lots of people were trading. I am sure they were incredibly profitable today. This is what they do every day. They trade in, they trade out. They don't care if the market goes up or down. They make money on volatility, and volatility is churn. And so I think the larger question here is, how do we want to design our economy? Do we want to incentivize people who study science to write trading algorithms instead of working on climate change? Do we want people who are graduating with PhDs to pursue these more lucrative jobs on Wall Street, in order to make more money for the wealthy? I mean, look, I did that when I got my computer science degree. I can't say that I would recommend it. But unfortunately, the way we sort of incentivize and organize our society right now, some of the really wonderful brain power is being spent figuring out how to optimize your options trading algorithm.
Yeah.
And I think if we can do some of these bigger, more structural things, and this is, something, Congresswoman, I think we have in common, like if we can cancel student debt, if we can, have a wealth tax, if we can regulate these big, powerful Wall Street actors, we can hopefully start to rearrange the incentives of our society so some of the brightest people aren't, using their PhDs designing trading algorithms on Wall Street. And that's sort of the bigger picture that I hope people think about.
Yeah, no, I mean, that is so powerful. I remember around the time I was graduating college, it was so similar. The folks that were on campus that are recruiting, it's around the time that I graduated, it was, Silicon Valley, it was big banks, consulting groups, etc., that kind of suck up so much of the most talented people in our society. And yet, what does that talent go towards? And if it's to make, do we really need physicists making trading algorithms certain milliseconds faster, or do we need that brain power in stopping climate change, or actually, some of that, and even if it's not just STEM fields, but even folks that get picked up by consulting organizations that are really profound generalists, strategists, etc. Should that be going there? Or should we be creating opportunities? This is one of the big, plug alert, but this is one of the tenets of the Green New Deal. We need to create 20 million jobs across skill sets, from basic labor in actually building infrastructure to some of the most, sophisticated scientific skill sets and investing and expanding those skill sets. We need to create 20 million jobs across the board minimum in order for us to make the infrastructure and policy changes to match the science of the crisis of our time. And one of the challenges towards that is the fact that so much of our social capital and human capital is being concentrated in arguably some of the wrong sectors at this time, or disproportionately being weighed into certain sectors. So I think you're completely right on that.
I think it makes me think back to the priorities in the CARES Act and the priorities we might even have right now, right? We have a real opportunity to provide people with like a way to actually survive the pandemic and get cash in people's pockets, cancel student debt, change our healthcare system. And is that what we're going to do? Or if we have another market crisis, which like we did last spring, is all of the energy of Congress going to pour into saving the bond market, which I would argue is what happened. And I'm sorry if you can hear my dog.
No, you're
who is whining. That's the kind of thing that I hope we can sort of reorient ourselves in this new year about what are our priorities and how can we make sure that people can do what they want with their lives and not have to hustle and, pursue the best paying job, but can actually maybe try to contribute to society. But it's going to take policy, right? And so we're counting on you and all of your colleagues, I think, to make that happen.
No, of course. Thank you so much for joining us, Alexis. We really appreciate it and your insight.
Thank you so much, Congresswoman. It's great to be here.
Thank you. All right. So that was, so incredible. I hope you guys got some insight from there. We had some lineup switches. So we have an amazing addition for you all today. Y'all, I need some drum rolls. I mentioned earlier, we're going to have the stock guy on. In my whatever technical difficulties during all that time, we also had a lineup switch up. We have one of the founders of Reddit, Alexis Ohanian, coming on too. Let me hop on here on the live. Can you all hear me? Oh, can they hear me? Alexis, I think you're muted. I think the stock guy's muted too. Can you hear me,
Alexis? There it is.
All right. Oh my goodness. Amazing. Thank you both so much for hopping on.
Absolutely.
Holy cow.
Fun to be here.
Let me start with some introductions. I'll start off first. Alexis, you need no introduction, but why don't you reintroduce yourself to everybody? And who you are and what we're talking about today.
Sure. Well, a long time ago, I co-founded a website called Reddit right out of college, and no longer at the company. I'd resigned from the board back in June of last year. But in these days, I'm running a venture firm I started called 776. But I spent a lot of time on the internet, and a lot of folks have been asking for my take on what this is, and I've been learning and watching, really, I think, just as everyone else has, because this has been quite unprecedented. And I'm happy we've got the stock guy here, because I even as a layperson, it seems to me that a hedge fund shorting like 130% of the float seems mathematically impossible, and seems like quite a problematic place to start. But it was some clever traders that saw an opportunity to take advantage of that and make an investment. And, here we are now, still watching it all unfold.
Awesome. And stock guy, would you like to introduce yourself to everyone watching?
Yeah, absolutely. Before I say I got to do this for legal reasons, I am not a financial advisor. Everything I do is for entertainment and education purposes only. Now that we have that out of the way, no, I'm just a regular guy. I've been trading stocks of about a little over a decade. Started during the 2008 crisis. A couple years ago, I started streaming here on Twitch. I was looking for a place to kind of talk stocks and hang out while I was trading. Everything I found on the internet was just kind of not my style, so I started streaming here. It started picking up. I started noticing that people actually wanted to learn about not just stocks, but the economy, finance, personal finance, about interest rates, how to be better off financially. It's something that's not taught maybe by design, and a lot of people never get ahead in life. And I thought, hey, if I could use some humor, I could use some knowledge, and teach people some life-changing things that they really, really need to know, and they want to watch me. Hey, I'll do it. And I've been blessed to have this is my career now, and I think it's amazing. And and this entire debacle has just been a whole nother level.
Yeah, so let's get into that. I'm interested in hearing from both of you. What has it been like to, and I mean, you've been in this, like, in a driver's seat in a way, watching this unfold, having your profession already be breaking these types of developments down to people, and then to see something as unprecedented as what happened this week. Walk me through a little bit about, like, what you're hearing folks ask you and what you make of this entire situation, and kind of what the horizon is from your perspective.
Well, I think the first thing I want to touch on is I thank you for having me. I think the one voice that's been lost in this whole conversation is the retail trader. Everybody having this conversation is a hedge fund manager or a pundit or a billionaire or a news person or a politician talking about the little guy, the retail trader. Well, nobody asked the retail trader, so I do appreciate the opportunity to, not that I speak for all, but I think that it's nice to be able to hear from that. I actually just did a YouTube video explaining how we got here in this situation, about how the entire GameStop situation folded out, right, or started, came out. A lot of people are putting the blame on Wall Street Bets, and I see this argument on all the newscasts about, well, it's this group of retail investors that got together to conspire to take down the economy and take down the big bad wolf. And I think that that's easy. It's so easy to find someone to blame when the blame starts way before Wall Street Bets, way before Reddit, way before any other forum. This is just a group of people who, I mean, Wall Street Bets is not a group. It's an idea, right? Anybody who is a retail trader who trades stocks, who wants to make some money in an economy that they're never going to retire, they're never going to own a home, they're never going to have the way of life that their parents and grandparents had. So they get an opportunity. They get an opportunity, and they see that opportunity to get something, to actually get ahead and to taste what all those people, in their castles have. And the second they do, and that's where we're at right now. And I mean, I'm not going to get into legalities of it because I'm not a lawyer, but this is where we're at with it.
Yeah, Alexis, I'm so interested in hearing your perspective, because in so many ways, you created this platform, but like so many other things, part of it is something that you help build, but then to see the creative ways that people use it, how it's manifested, etc. It's just, a completely different level and iteration. And first of all, I always think it's very humorous when anyone tries to explain what Reddit is on CNBC or anywhere else, much less like Facebook in a congressional hearing. To hear people kind of talk about this, I'm interested in your take, like the community and almost internet organizing end of this. Like, what is it like watching something like this? And could you ever in your wildest dreams, however many years ago, when you were cooking up Reddit in your dorm room?
No chance. No chance could any of this have been predicted. I think, and I want to stress and just echo, I think Stock Guy's spot on here. There's not a singular monolith community of, Wall Street Bets, just like there isn't a singular monolith community of K-pop fans or vegans or, right. This is community. This is something that spans platforms and the internet, and especially in the last 10 years in particular, as social media and smartphone ubiquity and all these things have connected us in real-time ways to organize around ideas, around concepts. That energy is something we as humans are really good just biologically at rallying around. And yet, we seek out those communities. We seek out that sense of identity. We seek out that sense of connection, and the internet supercharges it because of scale. And what we're seeing is we've seen echoes of it in so many different arenas in industry, or excuse me, in society across so many different industries. And now I see so many stories from people that remind me of conversations that I had and heard and saw after 2008 and the recession. And I think this is something that is a part of a new normal that we're all now going to have to navigate. And I think one of the byproducts of where I think it continues to go is more of a push towards a decentralization and more of a push toward individuals being able to take ownership, even individuals being able to get access to do the same things that institutions historically had a monopoly on. And I think that's the thing that blew me away as I understood it. And I know Stock Guy can go in on this. Like, the act of shorting a company like this and whatnot is behavior that we really need to call into question, because it doesn't seem at all sustainable when you can do that to more shares that are actually available. And it exposes some real fundamental flaws. And I really hope, and I think so many Americans are hoping that the little guys, the ones who normally end up picking up the tab, are the ones who will ultimately continue to be empowered and supported, and not the banks, not finance, not Wall Street.
Yeah. No, I mean, and the Stock Guy, you spoke to this so well, where it's like, little over 10 years ago, all of us got screwed, frankly, in the recession.
Mm-hmm.
And so much, I think, of this moment too is that we never saw a single person who was responsible for, what was it, 16 million or so foreclosures, just millions of people losing their homes, getting evicted, getting their cars repossessed, having to live off of rice and beans for months at a time. We didn't see anyone go to jail for that. And we didn't see virtually anybody held accountable in any serious way. And it almost felt like this week, one of the reasons that there was this huge, almost populist bottom-up type of rally on what was going on was that it felt like almost the first time that anybody was holding these folks who game this system accountable or have any sort of answer in that way. And now I'm not here to say that I'm not here to like put any moral weight on stock trading, but I think there is a visceral core to what was happening. I mean, my family, we almost lost our house. And that's how I started waiting tables, was to help my mom keep her home, because of so many people that were engaged in just this reckless behavior in the economy. And so, from the perspective of a kind of a retail trader, I'm interested in, I don't know if you were hearing a little bit about the conversation that I was having with Alexis Alexis Goldstein before, but, she kind of raised this question on, okay, yeah, we have this one moment. And the news was like very thrilling to a lot of people to see. Arguably, there may be some things that are happening under, kind of behind the curtain. And so it's not just, Wall Street bets that is driving up the stock price, but perhaps other actors involved too. But, the thing that she brings up is, does this really change how the game is rigged and how our economy is rigged? And if not, like, what are some of those, I don't know, what are some of those, like, are there any glimmers or windows that you see for an everyday retail investor, someone who's just kind of, buying stocks, or just anyone else that's at home watching all of this unfold?
For me personally, I think it's a twofold issue. One, you have the old idea that is you won't get in trouble if you rob from the poor, only if you do from the rich. Okay? And so that's kind of what we saw during the 2008 crisis, right? If you look into the politics of it. The only person who went to prison, I won't say his name, but he got caught and went to prison. He stole from rich people. But the banks and all of those corporations who robbed the American people, they got bailed out. Sure, somebody got fired with a $50 million golden parachute package. All right. Now, not only did the small people get hurt on it, but two things came out of it. Well, one of them was also from equities trading, and that was, hey, if you have a small bank account, if you have under $25,000, we're not going to let you day trade because we at the government know that we've got to protect you. Kind of what we heard from some of the brokerages today. We're gonna stop your ability to trade to mitigate the risk because we want to protect you. I mean, and so, hey, listen, we're gonna stop letting you do that because we know what's best for you. Excuse me, government, you're telling me my $4,000 I can't day trade, but I can still go to the casino and put it all on red, right? Yeah, that's cool. But wait, but I can't do it 4,000. Well, what about the guy who has 5 million? Oh wait, what about the guy who has 5 million of someone else's money who's betting that on? That's cool though, right?
Or shorting a stock for 130%.
Exactly. And then at the end of the day, not only does that happen, but it comes back to, other politicians and whatnot. And I don't mean that, like, of course, you're newer to the Congress, but what you have to look at it and say to yourself, okay, these politicians, who are their biggest donors? Hedge funds, banks, billionaires. Who stands to gain the most or lose the most from this? Who writes the laws? So now as a retail trader, I have to look and say, do I really think that my congressman and my senator who are funded by these people are going to write laws to protect me and hurt them?
Yep.
No, they're going to wait for the next news cycle story to happen, and then all of it's going to disappear.
I mean, listen, like, you're totally right. You're totally right. So one of the things that Alexis was talking about was that, what was happening here with Robinhood and with these trades were that everyday people were starting to be able to identify and exploit vulnerabilities in the system that has traditionally been cordoned off. And this is one huge example of that happening. But we've been seeing this happen across the board in so many other areas, and politics is one of them. So, for example, not just me, but in 2018, there was this slew of freshmen. It was one of the largest freshman classes since Watergate. And one of the things that a lot of these like new members of Congress have in common is that they're some of the only ones that ran on promises to not take any corporate lobbyist money. And whether they were left, whether they were more conservative, that was one of the through lines. Like, I don't take any lobbyist money. There are some people more conservative that don't take any lobbyist money. But that was like the one thing, regardless of your politics, that was starting to be shared in common. And the reason we were able to do that was because of technology, because there are these new platforms, the same way like Robinhood allows you to buy a singular stock, or the way that you're able to kind of like get in the game with $5-10 in certain, circumstances. Now it was a similar exploitation of our political system, where before, if you wanted to have any influence in our political system, you needed to cut a $2,500 check. Who's going to do that? What kind of person has the money to just give $2,500 minimum, if not more, to a politician? I mean, that is just the wealthiest people in society that have the ability to not just give that, but also organize and bundle it into millions of dollars. And so, we're kind of seeing these like similar exploitations. And then now as technology advances, it starts to actually democratize some of these systems. And people are starting to figure out all these little ways in which the game is rigged. And when you talk about this, I sit on the Financial Services Committee. I got that assignment when I first got to Congress. This is the committee that has jurisdiction over Wall Street. This is the committee that Mark Zuckerberg came in and the reason he came in under financial services was because Facebook was trying to roll out Libra at the time, their own kind of crypto-esque currency. But also we've had Jamie Dimon, the CEO of JP Morgan Chase. We've had the CEOs of Goldman Sachs. We've had Steve Mnuchin at the Treasury come in. And we see these alignments all the time. Financial services used to be known as what is called a money committee. There are also other committees like Ways and Means, which writes our tax code, like Energy and Commerce, which is responsible for healthcare policy, oil and gas policy, etc. And they're known as money committees Because if you are a member of Congress that gets assigned to one of these committees, you can raise a ton of money off of it. Because lobbyists will want to give you money, because CEOs will want to give you money, because some of the most wealthiest people in the country with vested interest in shaping policy in their direction will give you money. Because if you are assigned to that committee, then you get votes and determination on and markups. You can amend laws, you can sink them, you can vote for them, you can turn them down. And so these are known as money committees. Now, financial services, I will say, in recent years has become a little bit less of a money committee because more non-corporate funded members have been getting on that committee and getting jurisdiction over financial issues, over Wall Street. But first of all, that doesn't mean that presence has gone away entirely. There's still very powerful people that raise a ton of money from lobbyists, but also you have people writing tax code. So these folks, for example, like when we talk about capital gains tax and you talk about these huge corporations or people who make billions of dollars off of these trades, they also get to keep it. They don't, that doesn't circle back in any way in terms of contributions, or the idea that they take away, charitable giving and reduce those deductions for people. Like these are absolutely what you're talking about. And so when we talk about the path forward, it's like, I'm interested in hearing your perspective as just an everyday person and someone who engages with everyday people. What is your take on shorting stocks, and what is your take on how beneficial some of these practices are by hedge funds, and what are like some of these modes of accountability that you want to see?
Just to me or Alexa, sorry.
I mean, either or. We'll start with you, and then we can move to Alexis.
I mean, like I said, there's so many fundamental issues that this touches upon. It's not something that can be changed overnight. In my personal opinion, because of how entrenched this money already is, and the way this is, and how difficult it's going to be to take this down. If anything, I'm expecting it just to be harder for the everyday, trader. And I don't want to make everyday traders look out like they're completely without blame. I mean, that's just dumb, right? You take a gamble, you buy an option, you buy a stock and equity. Sure, you're taking a gamble. And I understand that. But I was telling these guys earlier, you go to a casino and play blackjack, you understand the rules, you understand it's a gamble, you understand the house has odds. But imagine if you had a 20 on the blackjack table, the dealer had a 19. And you're like, I win. They go, no, wait a second. They pull out the deck of cards, shuffle through, find a 2, put it down and say, actually, we have a 21. At that point, it's like, okay, I understood the risks I was taking, but now we've moved to a whole nother direction. And the problem is that the government, the regulations that have always been and always are the pit bosses. You know what I mean? They go, yeah, let me check on it. Let me do some regulation. Looks fine to me. Or, you know what? You're right. I'm gonna change out the dealer. Do I get my money back? No, but we'll make some changes in the future. And that's what we're sitting at. So will there be changes? I mean, that's up to you. I mean, your constituents, I mean, not your constituents, your fellow congressmen and men and senators, that's up to you. And so I'm really hoping that at this point, it's almost not about the money anymore. It's almost about a message. It's, you know what? I fought the man. I may have lost, but I may have also won. And if this brings enough attention, and I don't want to call it a plight because I'm not a martyr, but if this entire debacle brings about a change to where at least it evens the playing field a little bit, or you know what, I wrote this on my Twitter. Basically, I said, you know what, institutions have been allowed for decades to gamble with trillions of dollars on equities, on commodities, on options, gambling with the American people's livelihoods, and no one blinks an eye. But the second an everyday Joe gets a sliver of success, the world loses its mind. And we've got to find the boogeyman. We have to blame someone. Let's blame those kids on that Reddit forum called Wall Street Bets because they're ruining the system. Listen, if I need to be the guy that takes the fall, you know what? But my future, my kids' future are better off. Screw it. But they're pointing the finger in the wrong direction.
Yeah. Alexis, what do you think about like all of these folks trying to just blame random kids online? Not just kids, lots of people.
It is. So you asked how I felt about short selling. I have an answer for that doesn't feel appropriate. I will just say it's weak. I've never shorted a stock. Conceptually, right, you're basically betting a company will fail. You will make money when the company's share price goes down. In order to do that, you have to sell shares of the company you don't technically own, which is so already it's a weak way to make it's a bullshit way to make money, in my opinion. As an entrepreneur, as an investor in entrepreneurs, I love seeing people make money because they start a business. That business creates value for them, for their employees, for customers. That to me feels like an honest American way to make money. So yeah, if you ask me, I actually think hedge funds or just even the practice of short selling is kind of, it's a bullshit way to make money. But to do it in such an insanely leveraged way where they were able to reach numbers where they were able to short more shares than even existed. And it was exposed by some random, someone named Roaring Kitty on YouTube, who was doing the research. And he
shout out.
Yeah, shout out. I mean, this guy, all credit to him, right? He saw an opportunity. Now, here's the thing. So he decided to make an investment and buy into GameStop. And other people saw this video and the snowball starts rolling because, he did his work. He made a very smart investment. Hedge funds do this all the time. Hedge fund versus hedge fund is like headline news in business press. It's almost like it's Wall Street porn, right? Hedge fund after hedge fund in these exact same situations. The difference is it was one clever person, Roaring Kitty with a YouTube channel, who shared his work with the world publicly, and other people saw it and said, yeah, actually, I think you're onto something. I agree. And then voted with their dollars and did literally the same thing that these funds do behind closed doors in cigar-filled rooms. They did out in public. And so I think it is that has manifested now into something that I think you're absolutely right is about a statement. And it's not up. I mean, at the end of the day, it's up to folks like you, Congresswoman, to figure out what the plan is going forward. Yeah. I just know from, technology will keep moving forward. Communities and the sort of energy that folks have tapped into from all the way back in 2008. No one's going to forget tomorrow. No one's going to wake up in a week and be like, well, let's all go back to the way it was. The collective public cannot unsee this. And so I think there's going to be more and more energy to find more decentralized solutions. I mean, you're seeing, and again, I'm not a financial advisor. These are not financial recommendations. You're seeing cryptocurrencies like Dogecoin, which are literally, it's a meme coin that has really no value. It was made literally as a joke, surging, I think in part because there is so much of this energy looking for a way to rally behind something that isn't capable of having the game rigged in the middle of the game, as you pointed out, Stock Guy. And I think there are far too many Americans now who are just far too fed up with how rigged the game has felt, continues to feel, and how John and Jill America end up having to pick up the tab when things go wrong, and then the sliver that they get to do something that, for instance, a hedge fund does without any repercussions. All this happens.
Yeah, I also think so much about how the internet unlocks this, how there's kind of this connection as well. I remember seeing a while ago, I remember seeing a while ago how there were these studies that show if you put a bunch of gumballs in a jar, right? And you ask people how many gumballs are in that jar, the average person will not get the precise amount. But the more people you ask and the more people kind of guess, the larger that sample size gets, actually the more accurate the guess of the collective group becomes. And I think about that a lot in how this kind of popular public mass participation action, whether it's in organizing politically, economically, culturally, etc., how it's almost like an alternative or a competitor to certain algorithms in a way, like this like mass amounts of people throwing their brains at a problem, and almost collectively, with millions of people coming together, being able to solve these problems in a way that, these hedge fund algorithms try to fulfill a similar function. And the idea that those are competing, the idea that you kind of stack one over the other, I can tell you, at least as a legislator and as a policymaker, there's always this idea where you come in and say, regulate, regulate, regulate. And it's not as, that cuts two ways, right? And it's never about what the actual tool is, it's how that tool is being used. And as you mentioned, the stock guy, like so often, I see this all the time. People come in, just like the language that you were talking about today, under the guise of like, we're looking out for the little guy, etc. But what it actually is that it's lobbyist provided language with lobbyist provided talking points in order to get it through. And they win for a reason. These things, these packages, when they pass, very often when they pass in the short term, there's a whole PR line that makes it almost politically difficult to stand up against in that moment. And then it isn't until people realize 5 years later how there was all of this swindling written into the law that they turn around, they're like, how on earth did this get passed? And so there are so many kind of collections there, but there is a fundamental question. I mean, and again, this is my perspective coming in, but there are fundamental questions that we have to answer in not, just what rules or if you institute rules, but how do you actually shift power back into the hands of everyday people? Because that's ultimately what this is about. This is all about power, and whether you're protecting the power of the House, or whether you're going to use these regulations to be those pit bosses, as you mentioned, or whether you're going to use that power to actually, even out people's hand.
Yeah, I think one thing we're noticing, and I don't think anybody wants to admit this, though, is that the quote unquote powers that be, especially in the financial institutions, they're actually scared right now. Scared for two reasons. One, that they've noticed in 2020 with a bunch of people with money and Robinhood accounts sitting at home with nothing to do, or, not, playing down the situation, but they can collectively get together and change things. Before, you couldn't do anything in the market. What is Jack and Jill who are retired with their 401k and it's handled by some big institution who's handling money? They don't know what their money's doing. They don't know what's happening. And the institutions run wild. They help each other out. They upgrade and downgrade stocks all the time. I mean, let me ask you a question. If Goldman or any of these other large corporations downgrade a stock, is that not considered manipulation? Because their word pushes a stock. So I think that they're scared, and I think that they're pulling all the plugs and punches they can right now to try and cover, to stop this before it spreads, right? It's not, I don't want to use a word as crazy as a revolution, but it's like almost an uprising, right? Like the smaller people realize, wait a second, individually, we're nothing, but together we have power. And whether we collectively get together to pump a certain stock, which is not what's happening, I think that's completely just a straw man argument at this point. But I think it's an idea of, hey, we have something. And you know what? Like I said earlier, maybe nothing changes from this, but maybe everything changes from this. And if it does, a bunch of whatever you want to call us, a bunch of randos on the internet, and if you want to blame the ones on Twitch, on Wall Street Bets, if you want to blame them on some forum out there, and those are the guys who took the fall and started the change that got the ball rolling to make it. You never know, the butterfly effect. Sometimes a giant tsunami starts with a single ripple. And if we're that ripple as the retail traders today on this day, like I said, history will be written differently. But at the end of the day, hopefully we stirred up enough. That wasn't our intention, but it came along, and hopefully it gives you guys and the next wave of people to say, hey, this has been brought to our attention. These are my constituents. That guy may put money in my pocket or some people's pockets, but these are the people who put me in office. And I'm going to make life better for them. And so that I hope that that's what comes out of this.
Yeah, no, I hope so too. And I think you're right. It's also raised really key and critical questions also about power. Like, when there are all these accusations kind of coming out saying, oh, these people are trying to manipulate the market. There are people raising very important other questions too, like how, these hedge funds can go on CNBC and send out a message to millions of people watching. And does that not also influence people's thinking and perception? And when was the last time that you saw a retail investor getting airtime like that? And how are these things that different? Or how is, folks having certain advanced knowledge, even if it's milliseconds for an algorithm, how is there any equivalent to that in terms of power? And when there's any disruption or challenging of power, I mean, we say this all the time back home and in here in New York City, is that, when you speak truth to power, power fights back. And so watching how this unfolds, I think, is also going to be really interesting in seeing how everyday people kind of internalize and how retail investors, like you say, process this for the future, and how this may impact things or may not impact things. It's going to be a really, really important question for all of us to answer. So, but thank you guys so much for joining me for this conversation. I really appreciate it.
Thanks for having us.
Thank you for having us, Congresswoman.
Absolutely.
Time.
Do you have any last parting thoughts for either of you guys? Just want to give you the floor.
For me, I just want to say, just for me, I just want to say thank you so much for having me on. It was nice to have a voice. Once again, like I said, I don't speak for every retail trader. I'm just a guy who trades stocks, who talks online. But at the end of the day, like I said, everybody had a risk. But I really hope that change comes out of this. I hope that this whole straw man argument of let's blame the little guy because he's disrupting the system stops. I hope that the real issue comes to light. I hope regulations actually get done, even though I'm obviously fully skeptical based on historical precedents. Regardless of politics, I'm glad that somebody out there is taking, the lead on this, and I appreciate that bringing light to this. I hope that, like I said, regulations, even though I don't like regulations, I hope something changes, and it's all going to start with you. And with this whole situation. So I appreciate it. I appreciate you doing this on Twitch, bringing on a Twitch streamer too. By the way, welcome to the platform. I saw you do Among Us lately, and it was an honor being here. Thank you so much. And I hope we hear back from you pretty soon. Okay.
Of course. Likewise. Thanks for hopping on, Alexis.
Thank you. Have a great night.
I've been thinking a lot about these stories. I mean, they're deeply personal stories being shared about people, their entire families cramming into, studio apartments, like the aftermath of 2008. And, I'm thinking a lot about a generation. Let's go with millennials in particular. I'm at the upper end of it because I was born in 83. So I'm like just barely. But, I came of age right before 9/11. I was a freshman in college, and I remember in those years that followed, a lot of us were watching as we were told one thing about expectations of WMDs and led to 2 foreign wars, and our questioning of a really important institution started to begin, because we said, well, hold on, this is really important decisions, and with the benefit of hindsight, we realized all these institutions weren't quite so perfect. And in fact, we're pretty deeply flawed. And then for so many, in the next few years to come, they might be entering the job market to the recession. And they looked at these institutions, these financial institutions that we all trusted, that our parents trusted, our families trusted. And it was like, well, they didn't know what they were doing. They got too greedy. They made mistakes. That started to make us even more skeptical of the institutions. And with an economy in ruins, then, many were saddled with student loan debt, and many worked their butts off and were told by well-intentioned family members, society, everyone, look, if you just work really hard, get good grades, go to a good school, you'll have a great job. You'll have a good middle-class life. That was the story. Everyone was told. and they're looking around going, well, hold on, I did all the things, but there's no job for me. And especially, at a time, this is more coincidentally, as software and technology continues to, or really started eating the world, those skills started to become really valuable. Other skills, less so. Increased automation, those other skills, less valuable. And so like, okay, that was another institution, higher learning, academia, college that was supposed to do this thing. And I did what I was supposed to do, and it's not living up to it. And then with social media, because this is the first generation of digital natives, there is a fluency because we do understand this, because most of us been lucky enough to have an internet connection since, we were pretty young. And so that part feels normal. The idea of falling in love with someone you don't even know, making a friendship with someone you've never met in real life or offline, building community with total strangers on the internet. All these things feel very normal to us as a generation. But the idea of institutions we could trust, it's been rocky. And the last 4 years, we've seen our very governmental institutions let us down in so many ways. We've seen a global pandemic that we know we could have handled so much better. And so I think a big thing underlying this, especially for millennials and just digital natives broadly, is that we had institution after institution let us down in ways that previous generations never had. And these were the things that I think a lot of well-intentioned people were telling us to trust and believe in, but let us down at a time when technology that allowed for bottom-up connectivity, that allowed for more decentralization, that allowed for more sort of counter voices to compete with those institutions that we were fluent in, started getting more and more and more powerful and effective and successful and scaled and just a better user experience, frankly. Like the idea that like our parents, if they were able to, would have still had to like call up a broker and be like, buy some shares of blah, blah, blah. Thank you. Like, and the fact that we can sit here, and with our phones do it while we're in bed, it's a better user experience too.
Yeah.
And so you have
people
this
today are
perfect
like,
storm.
call a broker.
What?
The social anxiety of Gen Z and millennials.
Right? I don't want to.
I'm not calling nobody.
No, you really got to earn that phone call. I gotta remind myself. I gotta call my dad actually. But we don't. It is. So we had this where institutions really consistently let a generation down at a time when technology, with an amazing user experience and the community, helped us be better and better. Right? I learned most of my best dad tricks from strangers on the internet. No offense to my dad, but his one brain, and he did an okay job, but his one brain is nowhere near as good as the collective of millions and millions of dads sharing their experiences, their empathy, their advice. And so it's this perfect storm where I think, at the end of the day, the millions of connected brains are always going to be better than the few. And I hope the way forward is, at the end of the day, for better things, for better businesses, for better investing, for better education, for better all the things. And the one theme that continues to show is this intersection with community and technology. And now it's been infused with capital in a way that's, I think, just getting started. And we're already seeing it in alternative assets, whether it's people trading sneakers or buying and selling trading cards, or obviously cryptocurrencies. We're seeing all these new ways to opt in to investing that there's no script for, but it only works in a world where you have so many people who feel disenfranchised with the status quo, and a trust, actually, a really great trust in one another, even when one another might be another stranger on the internet. So I've gone over my wife would say I'm monologuing right now, but I really appreciate having me on.
No, of course. Thank you so much. Thanks for being down to have the conversation. I really appreciate it. Thanks, Alexis.
Awesome.
Thank
you, guys.
Bye. Thank you. All right. So, I'm moving the camera around. Okay. So, we've just heard from an expert on not just a former 7-year Wall Street professional, but also someone who translated that experience into Occupy and now into really speaking truth to power in policy and advocacy, Alexis Goldstein. Then we had Alexis Ohanian, founder of Reddit, talking with us just now, along with the stock guy who, runs a Twitch channel, and really has been watching this experience unfold, not just for a few days, but frankly for months, if not years now. And I think there's just so many through lines that we're seeing here. One, what Alexis was just talking about, what Alexis Ohanian was just talking about, was just fundamental lack of trust in institutions, which is something that I've seen and experienced since we were kids at this point, where we grew up and there's an entire generation who has had their trust in government rocked, trust in Wall Street rocked, trust in basic institutions rocked, trust in our educational systems rocked, trust in our media also rocked. And that creates so much kindling for volatility. And the question is, what do you do with that lack of trust? And it's not even to say that lack of trust is, that lack of trust has been earned, right? And Alexis was talking about the lead up to 9/11. Yeah, I mean, there were newspapers that just amplified the case to go to war that was totally bogus. That created lack of trust. I mean, that wasn't the only thing, but that's just an example of something that created a huge erosion in trust in institutions. Colleges and college tuition and student loans just, going through the roof has, I think, really contributed to suspect of institutions, because so many people felt duped into taking hundreds and thousands of dollars of loans. You have lack of trust in government, which we don't even need to explain or go into. But, frankly, with just our campaign finance system and people feeling that some of the folks that get elected are not being responsive to their constituents as much as they are being responsive to their donors, like all of this has led to all of this bubbling up. And the question is, do you channel that energy into destruction, or do you channel that energy into creativity and construction? And I think these are questions that start to be asked even politically. Like, I think what happened with the Trump administration was people taking all of this lack of trust in institutions, this crisis of faith in so many of the most powerful institutions in our country, and saying, we're going to channel this energy into destruction. I'm just going to be straight up. Like, that's my read on the situation. And the Trump administration was all about the energy of destruction. We are going to tear all of it to the ground. And maybe that's cathartic for some people, but it has endangered and stripped the rights of so many people in this country. If you are working class, you got screwed in so many ways. If you're Black, brown, immigrant, etc., you got really rocked over the last 4 years. And so now I think we have an opportunity to channel this energy, instead of destruction, into construction. And the real questions are, what are we going to build now? And how are we going to reinvent so much of this now? And, I think some people, and I think a lot of folks, there's this thrill and this idea of maybe we have some ownership over this situation. Well, if you think that's good, wait until we actually start working for there to be, employees of companies to actually sit on the board of those companies. What happens when people who actually work, when fast food workers or representatives of them or actual workers in a company actually get to sit on the board of these companies? What happens if we actually instituted a real deal wealth tax on the 0.0000000 on the absolute wealthiest people? Like, we're talking about the Waltons and the Bezoses of the world, to, help us really finance things that actually contribute to our society. What happens when we guarantee health care and pass Medicare for all, or create 20 million jobs that are not just solely dedicated to helping the wealthy compound on their wealth, but actually, save our planet and stem climate change. These are all super important questions. I'm super excited about where these questions can lead us. But, I think that there's so many things that come up in this conversation. Clearly, there's going to be a lot that we're going to have to look into. And we are going to take a lot of these questions and move them forward. But we're looking into it. And if I'm not mistaken, I believe there is going to be, we are starting to see hearings and congressional inquiries into a lot of what's happened this week. And you know what? Thank you guys. It's now 10:30. Thank you for your patience in my extreme technical difficulties at the beginning of this, but that's okay. We're walking through it all. And next time, hopefully I'll be able to play a game. I've been practicing my League a little bit. I dusted it off. I was a little too self-conscious to play League in front of you all without having played in a long, long time. But maybe I will be at a level where I can at least not embarrass myself. But that's okay. See you guys soon. Thank you so much. Thank you to all of our guests. Hopefully we'll be able to join on with some more. But bye, everyone. Thanks.